All right, everybody, welcome to another edition of Market Talks with Dr. Stoxx. It is the 30th of October. We're getting down to the end of the month. We're just about to start the most bullish month of the year, November. That's, of course, a seasonal projection based on historical returns. And as always, what has happened in the past is no guarantee what will happen in the future. But it is nice to know that most years, November is an excellent year, and it's usually the most bullish month of the year. We've got that as a tailwind coming up in just a few days. But first, we have to get through some big earnings. Tonight, we've got Facebook and Microsoft. Tomorrow night, we've got Apple. And what was the other one? Amazon. Four of the 6 or 7 biggest companies in the world. So that is important. And we still have to get through the jobs data on Friday. We've got an ISM read. We've got jobless claims, all kinds of economic data. And my prediction is that as long as all of those things don't come in horrible, that we should resolve to the higher side by the end of the week, maybe even into next week. And then Tuesday, it's uncertainty all over again with the great election that's coming up. So lots to work through. We're going to just take this one day at a time. We have a bullish bias as a tailwind. The market's been going up. We're up near all-time highs. NASDAQ hit a new all-time high this morning. But we can't rely on that. We just trade it day to day to day. All right. We've been managing to get some really good sweet spots. We've got some good profits that we're starting to protect with our stops. But not everything has been working. And today, most sectors and most major stocks are lower. All right. So just to let you know, I'm Dr. Tom Carr, otherwise known as Dr. Stoxx. I'm the founder, CEO of drstoxx.com, DRSTOXX, your one-stop shop for trading advisories, how to trade webinars, trading system manuals, and our great live trading room. Click on that live trading room button there. You'll be taken to our Discord. Great community, 200, almost 300 now members who are trading with us day to day, watching me trade. I tell you what I'm trading. I tell you where I get in, my stop loss, where I'm getting out, et cetera, et cetera, et cetera. All right. So let's go over to some charts and take a look at indexes. And before I get to that, let's just put SPY on the chart here. This is my daily chart, and typically when I want to talk a little bit first about my chart setup. I typically put the daily chart on the left-hand side and the hourly chart on the right-hand side. Let me condense this a little bit. And I have sort of the required indicators on each of these, but then I swap in and out of some optional indicators. So I'll tell you a little bit about those. Let's just look at the daily chart for now. The thing that I use mostly to determine the intermediate trend of the stock or index is the linear regression channel. You've got that here as an overlay. I put it on at 1.5 standard deviation, 2.0 standard deviation. When you put one on top of the other, you get this little pink band down at the bottom and a blue band up at top. Those are your price targets and tend to act also as areas of support when it gets down into the pink, areas of resistance when it gets up into the blue. My mantra, everybody in the room knows this, is that we tend to buy or like to buy the pink in an uptrend, and we sell short the blue in a downtrend. Now, that's a very general rule. We don't always abide by that. There are plenty of other reasons why you might buy a stock. It may not even be in an uptrend, and plenty of reasons why you want to short a stock even though it's in a strong uptrend. But that's just a good general rule, and if you're new to trading, hey, I think you could do pretty well just trading that single rule. We add on top of that the 50-period moving average, that's the black line, the 21 exponential moving average. I like to use that not just because I learned it from William O'Neill, but because it tends to be a little more responsive to current price action. That's the exponential part of the moving average. And William O'Neill likes to say that if the price is above the 21, good things can happen. If price is below the 21, not so good things might happen. That's a good also general rule to have. I like to look the relationship between the 21, the 50, and then I have the 200 down here. That's the deep, thick green line. When you have those stacked, the 21 on top of the 50, 50 on top of the 200, that's another sign you're in an uptrend. When the 21 is below the 50, you might be in a trading range or maybe starting to tip over into a downtrend. When the 50 is below the 200, you're definitely in a downtrend, right? So there are other ways of determining that. I've got the color-coded volume bars down here at the bottom, and I like to say that volume balance is bullish when there are more greens than reds and taller greens than reds. Volume balance is bearish when the opposite is true. At the bottom of the chart, this one I swap out quite a bit. Sometimes it's the rate of change, sometimes it's the MACD, sometimes it's RSI. Most often I have on here the stochastics. That stochastics, in fact, along with moving averages, was the very first technical indicator that I learned about, and it was the very first one I used in my pullback trading system, my bread and butter trading system, and I just have it on here almost always. So I have it set at the 14 default periodicity. The only thing I've changed is that the smoothing factor is a 2, not a 3. All right, so that's my standard setup. Now, I do like to put on a few other indicators, and sometimes these go on, sometimes they come off. Just kind of depends on what I'm looking for that day. I put on a market bias indicator as just another way of determining the strength of the trend. It's green in an uptrend, and it's dark green in a strong uptrend. Now, you have to go way back to find any kind of a red period, but it turns red in a downtrend and dark red in a strong downtrend. So that's another way of determining trend. But I tell you what, I prefer mainly just to eyeball the charts. I look at the moving averages and the linear regression channel primarily for trend analysis. I have a divergence indicator on here, divergence for mini indicators. This is a freebie on TradingView, and if you just search for it, you'll find it. So this is a good one to note a convergence of divergence. Let me say that again. You're using this indicator to note a convergence of divergence, either bearish or bullish. When the market is going up, you're looking for bearish divergence. When the market is going down, you're looking for bullish divergence, and it highlights these very nicely on the chart. Now, the thing that you have to realize about this, because you'll lose money if you don't understand this principle. Number one, divergence doesn't mean an immediate reversal. It can take several days for that reversal to kick in. Number two, that reversal may be very short-lived, may be very, very shallow. These divergences almost always flag some kind of a market weakness when they're bearish, a market bullishness when they're bullish. But man, they can be really short-lived, they can be very shallow, and you can get a 6 or 7 indicator convergence that just goes almost nowhere. So with all of that said, it's not a bad idea to put these on your chart as an additional kind of warning signal. So if I want to buy up here, right, and I get a convergence of 6 indicators flashing bearish divergence, no, I'm not going to buy it there. I'll wait for the pullback. You got the pullback. We're starting to bounce a little bit now on off the 21 period. So that's another one that I put on, and I'll show you one more. I'll take this one off. And I like to use this one. This is a proprietary indicator. It's not for free. The guy who made this is sharing it with me, so I'll share it with you. But I don't know if you can actually find it in TradingView or whether you've got to. I'm not even sure if he's selling it, to be honest. So this is a, and you will find similar kinds of indicators that give you volume data on the price bars. This is what this is doing. It's showing me where the volume shelves are, both bullish and bearish. When the price drops into a volume shelf, and if it's green, it's strong. If it's gray, it's not so strong. If it's thick, it's stronger than the thinner ones, right? Here's a real thin one down here. So that's not as strong as a shelf, as a support shelf than this one right here, which is much thicker. And then you also get them on the top side as a bearish indicator. So when the price gets up into this little volume shelf up here, this is purple, so that's not as strong as a red one. Thicker is stronger than thinner. When it gets up into that, even if it's on an intraday basis and then pulls back down out of that, then you get the sell signal. And this indicator also gives you a target and a stop loss. I don't think those come into play very often because the stop loss is usually a pretty good place, right? It's pretty close. It's just on a percentage basis, has nothing to do with the volume or the price. The target price is usually way, way down there for a short, way, way up there for a long. So I don't think that's really well placed. But in any case, it gets into the volume shelf and falls out of it. That's a short. It goes down into a support shelf and bounces out of it. That's a long. And yeah, it's quite a nice signal. And I do think that these signals actually work better than the divergence signals. So if you stay with me here in the room, you'll get these signals for free. How about that? Let's take a look at SPY. Well, I guess I'll go over my hourly chart. Pretty much everything is the same over here on the hourly chart. The one difference is that I don't have the 50, 21, and 200. Instead, I have the 34 EMA bands set at high, low, and close. These give me a trending analysis. They also give me support and resistance levels. And I like the 3 bands here because you can kind of gauge on a pullback. If it just tags the top of the band, which would be the blue one, that's then the market is really strong. If it goes into the middle of the bands and tags the green line, it's maybe not as strong. And if it goes all the way down to the red line and tags it and bounces out, we're looking at maybe a little bit of weakness here. Not a great. The pullback is a little too. The pullback itself is too strong. The bounce potential out of that, not as strong. So I like to use this, and I look at the hourly chart quite a bit to determine whether we're gauging with a proper entry or not. Back to the daily chart, let's look at a few. So we had an inside day bar working today, but we went a little too high to the upside for the SPY. I think QQQ is still working on, yes it is, still working on an inside day bar. So inside day bars, remember there are 3 types of candlestick in terms of direction. You've got the outside day bar, the high is higher than the previous high, the low is lower than the previous low, bearish engulfing, bullish engulfing, call it what you want, but that's a number, is it 3? Or I think it's a 3, right? So that's a number 3 candlestick. Number 1 candlestick is the inside day bar. The high is lower than the previous day's high. The low is higher than the previous day's low. And then there's a 2. 2 is in the middle. 2 is a directional bar. So either the intraday high goes higher than yesterday or the intraday low goes lower than yesterday. And that's a 2. You have a 2 up and a 2 down. Those are the 3 types of bars, and there aren't any other kinds. We have an inside day bar. So an inside day bar in QQQ is typically where you start to see some reversals. If it's in an uptrend, it flags potentially a reversal to the downside. If it's in a downtrend, it flags potentially a reversal to the upside. And you'll see. Let me get let's get the highlighter out here, I think. There's an inside, no, let's not do that one. Let's do this one. Here's an inside day bar, came at the bottom of a fairly sharp downtrend, flagged an upside reversal. Then we got to the upside. Where's an inside day bar? I don't see any here. No, these are all directional bars, either 2s or 1s. There's a 3 outside day bar. Boom, 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 boom. No, these are all directional bars, and then that's not an inside day. That's an inside day bar right there. Came at the top of a short-term uptrend, and that one didn't really follow through, right? So that didn't really flag a reversal. And now we're getting another one at the top of a very short, really short little uptrend. So I'm going to say that this one is not really flagging a reversal just yet. Here is an inside day bar right here that did flag a really minimal little pop, and that was really not at the bottom of a downtrend. So yeah, you have to be careful with putting too much emphasis on inside day bars, but they are important Here's a good example right here, right at the top, inside day bar at the top of an uptrend. Here's another one at the top of an uptrend, and here's one down here at the bottom of a downtrend, which didn't follow through too much. Sorry, just a little bit there, and then it went right back down again. So all that's to say, we're printing an inside day bar. Inside day bars are usually pretty ugly on an intraday basis. You get a lot of chop. It's a condensed trading range. You have everything falling below the resistance lows. You've got everything, the support lows and everything falling below the resistance highs. And it just gets ugly. Up, down, up, down, up, down all day long. Confusion, discounting, pricing in, uncertainty about all the earnings that are coming out, the data that's coming out, the election that's coming up, and to be totally expected. No surprises there. SPY, not quite at all-time highs in the last 6 or 7 sessions. We're sort of discounting that recent print to all-time highs, going sideways. This is just a pure, choppy, trendless consolidation move right here. This little move right here. Pure consolidation, and we are getting tight. We're getting very tight. So the move out of that little pennant should be pretty sharp. I'm guessing that this is going to come on Friday. We get one more tiny little inside day bar tomorrow, maybe. Friday is the day we get the move. Should be to the upside because we always expect the move to resume to trend, and the trend is up. And we are above the 21, and we're above the midline of the LRC, and we're above the 50, and all kinds of good things can happen up there. But man, the data has to cooperate. If we get some really bad earnings and bad jobs data, it's boom, right back down, test the 50. Couple of weeks of some scary downside action is possible. Possible. Not likely, but possible. QQQ, pretty much the same story, although this is trending a little bit better to the upside. So we've seen, already we've had a few good earnings, and the ones that weren't so good, most of them kind of recovered off the gap down to some extent at least. And we're banging up on just below 500. 500 is a massive resistance line. We need to get above it if we want to see QQQ really take off. Small caps look really good. So they gave a buy signal yesterday above the 21, good volume, oversold stochastics with a fresh buy signal. Market bias is in uptrending mode as the MAs are stacked. It was a buy yesterday. Now we were already long TNA, so we didn't have to do anything with this. And it's a follow-through day today. We actually got way up to print some highs above 224. It has pulled back. Most of the market has pulled back today, but it's good, right? Really nice and green and strong and following through on that buy signal from yesterday. And when you've got the small caps happy, and I think Labu, at least it was green last time I checked, which is the biotechs. You want to see the bonds, the biotechs, the small caps, and the banks, especially the regional banks. If you see all 4 of those things green, you've got a healthy market, a healthy appetite for risk. And that's kind of where we're at today, but it's a little bit mixed. Anyway, bonds are back to green. They dipped down very briefly, at least not the 20-year, but the 10-year dipped down into negative territory, bounced back up again. And this is what we want to see. We want to see the bonds get back on track. We want to see yields come down. Yields have just been in a skyrocketing phase despite the Fed initiating a cutting cycle. The yields are still rising. I do think that's a temporary response to some very extreme government spending that we've seen over the last few months. We could ask why that's happening. We don't need to know why it's happening. Just that it is happening, and that's causing the government is printing all these new bonds to pay for that. And of course, you know, the old supply and demand curve from Economics 101. You have too much supply, the price goes down. That's where we're at with the bonds. I do think that has come to an end, or is coming to an end. There was some good data out yesterday in the repo market. And so let's hope that the bonds have have fallen out, and that will be a good tailwind to the rest of the market. We want to see capital prices come down. Definitely want to see loans get cheaper, mortgages get cheaper. Let's drill down into an hourly chart on this, because I'm kind of curious to see what the internal price action is here. Okay, so you can see from my my indicator that we came down into a minor price shelf. That was yesterday. This is all today's action right in here, and it's forming on the gap up. Where's my line? There it is. It's forming on the gap up this little pennant, which is bullish. The trend is down. Obviously, the trend is down. All the moving averages are falling and below each other, and the market bias is red. And this is just an ugly chart all around. But this little pop that happened yesterday, and then a gap up, and mostly so far a hold of that gap, and then a tightening. Where are my hands? There they are. Tightening consolidation into this little wedge, right? That's potentially bullish. Now, the trend is still to the downside, so if it falls out of that wedge to the downside, no surprise there. But if it can break out to the upside and get above 93, which is, look how much of a resistance line that is, support, resistance, 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 resistance. If we can get above 93 and start to fill this gap up to near 94, and there's another gap up to 95 and change, bonds are back, baby. We're just not there yet. Not there yet. Lots of work to be done. All right. I'm rooting for bonds. I actually have some TMF on board, which came from a really bad trade that the whole trade itself was pretty much of a wash, but I held on to TMF too long, and it just kept going down, and I got very stubborn with it, and I'm going to start selling calls against those shares so I can make some of my money back, but I'm just going to hang on because I do think bonds are going to have a good 2025. All right. Quick run through my greens list. We'll go back to the daily chart, and I'll show you a few new setups that we might be interested in watching. Someone asked me yesterday in the room, do I have a watch list that I post in the room? Sometimes I'll post this list of greens. I usually update this a couple of times a week at least. I'm also running scans over in Market Surge, which is an Investor's Business Daily product. I'm a partner of them. If you have any interest in taking a cheap trial of that, let me know. I'll send you a link. But I don't have a set of stocks, mostly for the most part, that I want to get in at the bell. I take the market tape as it comes. I look at market direction as it comes, sentiment, volume patterns, what's moving, what's not moving. I consult with my pro trader group. I run scans over in IBD. I run scans in FinViz, and I start to see patterns and note charts and so on, and then we figure out what we're going to trade. But all of that said, let's take a look at ones that are setting up, and maybe some of these have flagged a buy signal. Most of these are going to have earnings in the next week, so probably not best to get in. I always recommend not buying ahead of earnings. Wait until the dust settles. But this is I think this is a software play. I like the fact that it is uptrending. We've got the stacked MAs. We've got the dark green. We've got the buy signal on stochastics. Nice pullback to the 50. All of that looks very, very good. The only thing we don't have yet is a good, healthy set of volume to trigger the buy signal. So we're getting a little bit of a bounce here, but it's a weak bounce. We need to see more commitment on the part of traders, and they're probably not going to commit until after earnings. Shop, this is what I like about this is it is uptrending. Everything's green. Everything's moving higher. Market bias is good. Fresh stochastic buy signal. Yesterday, big volume day print on an outside day bar at the bottom of a very soft pullback. We like to see soft pullbacks. We don't want this cascading waterfall that in 3 bars you've gone from the blue zone to the pink zone. We don't want that. This nice little soft pullback into the 21, near the 21, into the salmon part of the linear channel. All of that's good. Yesterday, a buy signal. I wouldn't kick anybody in the pants for buying this one today. But again, earnings coming up very soon. Affirm, I almost got us in yesterday because yesterday gave a buy signal yesterday confirmed the buy signal that took place on Monday. Monday buy signal on volume, fresh stochastics, follow through day yesterday, and today big boom, big green stick. Now I wouldn't buy it up here. My rule on big green sticks is you got to wait a couple of days because usually you're going to get a better price. And earnings are coming up next week, but this was ready to go. Monday was your buy signal. Tuesday was your follow through, and more follow through today. We are long PANW. We're just selling premium on this one. We're not actually in the shares. It's not the best chart, but it is uptrending. Dark green, fresh stochastic buy signal today. Yesterday was officially a buy signal on volume, so that's also good. We are long net. We just went long net, and it gave the buy signal today. Yesterday was just a little bit light on the volume. Today, good solid volume, and this looks good off the fresh stochastic buy signal. Probably will come up here into the upper shelf if it can get through that new 52-week highs. I like Avgo, very strong company, kind of a way of playing the fabulous space without having to get on board NVIDIA, which has been a bit squirmy lately, hasn't really been that exciting lately. Avgo, however, big upstick. It had some good news out with the new contract extension, all kinds of good stuff going on in the company. An inside day bar today, it's kind of pricing in some of the uncertainty with the market, but we're still up in the upper third. We should be okay. And this is also one that we're just selling premium on. Labu, we are long shares of Labu. I'm actually also selling premium on this one. And it's not the best chart out there, but it is a bullish chart. And Labu can be a lot of fun to trade. Let me take that market bias off there since it's kind of overlapping. There we go. So slight uptrend. We don't have stacked MAs. This is not a longer term uptrend. It's more of a trading range, a sideways trading range. But we came down just a few days ago to test the top of the pink. Minor volume shelf. We were down in the pink a few days after that. And a higher low, if we can take out this pivot high around 133, we should get all the way back up to the recent highs, 142, 143, somewhere in that neighborhood. TNA small cap index, your leveraged version of it, hasn't triggered yet a buy signal. We need more volume, but I like what it's doing today, as I said before. We are long Bitcoin. Big up day yesterday. We were able to move our stops up into profit territory. Inside day bar today in the top 1/3. Yeah, we're the volume shelf, and that's probably why it's a big, thick one. So we have to be a little careful up here. We'll just keep moving our stop up and protecting profits, because this could roll over and then it's all downhill from there. But I like the fact that this has broken out. It's above 70. People are already talking about 100,000 by the end of the year. I think there's some really good tailwinds politically too after the election for a bullish year for Bitcoin. iRobot. This is just kind of a bottoming pattern. This is nothing in an uptrend here. Everything is downtrending. Fresh 21 over 50. That's like the earliest form of a potential bottom right there. And I guess what I like is that it is printing a cup and handle. Cup and handles are, a fairly bullish pattern. When you can see them at the top of uptrends, they form a continuation higher. When you see them at the bottom of downtrends, like the inverted head and shoulders, they form a reversal base from which to go higher. And it is right up there at the neckline today. Coherent, good uptrend, very nice uptrend, strong momentum chart, stochastic buy signal. Yesterday, big green stick on good volume. That was your buy signal. Today, it's just another inside day bar. The generator company, very good growth, good fundamentals, often on the IBD top 50 list. Nice breakout to 52-week highs. Pullback. It was a big gap and crap day, and it's been kind of pricing that in technically. back to the 21, midline of the LRC. Everything's rising. Everything looks good and strong. The only problem is earnings are tonight, I think. Tonight or tomorrow, probably tomorrow. Docu oversold, pullback, not yet a buy signal, but we're getting close to one. ON, everybody's favorite retail play. And why do we like this one? I guess we did like this one. Yeah, this big green stick here on the pullback. Big volume, fairly new stochastic buy signal, and it's been sort of a pullback ever since. We'll have to see where that one goes. That's not a very good setup, frankly. I'm just going to take that one off. HASI, I don't know why I like this one either. Gone. Upstart. Okay, so this one's a little bit better. So nice looking uptrend, right? You can all agree it's in a strong uptrend, 21 above the 50, 50 above the 200. We've got the oversold stochastics. We've got a nice looking reversal bar today off the midline after testing the 21 yesterday. What we don't have yet is volume, and volume recently has been a little bit on the heavier side on the distribution on that pullback. So, but I tell you what, this is a group of software plays that have been just beaten down for months and months and months, now really starting to show us some very good price momentum. There's a group of them. Upstart is probably the best one in that group. So keep an eye on this one. We'd just like to see this one get a little more volume, and earnings are coming up, so be careful with that. All right, guys, where are we at? We've got an hour and 15 minutes. Let me take about 3 or 4 chart requests. So if you want to type over in the Discord room, trading main room, type out a few ticker symbols. I'll take a look to see what you're interested in. Carvana, I just looked at this one. This was way up there. Not showing any real sign of slowing down. It looks like earnings are tonight. So, yeah, you don't want to be long. Not that it can't just keep going higher, but usually when you have a stock up at 52-week highs heading into earnings, man, they really have to knock it out of the park. Why? Because the market's already been pricing in what it expects to happen at earnings. It expects a double beat. It expects a raising of guidance going forward. And if you get anything short of that, even a beat that's just, it misses the whisper numbers, you can really get a big tank. That said, without earnings in the picture, this is a good momentum trade. It's a hold, not a buy. Where would you want to buy it? Well, you would want to buy it in these little breakouts above former resistance, right? You buy the breakout. You buy the breakout. If you get a consolidation like this, you buy within the consolidation as it's banging up against that resistance line. And you'll see another little period right here. Very good place to get in. Somewhere in this little tight consolidation, because it's not going down. All the momentum is up. Everybody wants to get on board the next big leg. Well, we just got the next big leg, and so it's probably, either it's going to get whacked on earnings or it's going to go way up and do a gap and crap the next day. That's usually what happens when something's this extended. Or it's just going to get all tight again and then break out. So it's a hold, and I wouldn't hold over earnings, frankly, but man, if you are, God bless you, and I hope you have a great jump higher in that one. All right, let me do the rest of these MLCO. All right, so it's not an uptrend, but it's not a downtrend that badly either. The MAs are all over the place. They're not going to be much help. I do like the fact that it did have a good rally higher with some good healthy gaps in there. It came down to close one of the gaps, and it has stayed above the 50 and the midline of the LRC. So all of that's bullish. This is probably something you'd have to dig down into. I don't know the company at all. Dig down into the earnings and why did it go up so fast, and who knows what the rumors are. It doesn't look like the market's been that happy with it, because this is well below all-time highs. But this could be a recovery, right? All businesses, especially a cyclical business like this one, go through contraction and expansion phases. This could be a brand new expansion phase. But man, I can't tell that from the chart. You're going to have to dig down into the company balance sheets and what analysts are saying about it and all of that to determine that. I'll take just one of these. We looked at Tesla yesterday. Let's look at VST. Haven't seen this in a while. This good strong chart, nice looking uptrend, stacked MAs, and yeah, you're above the 21. It's kind of doing this little, it did some range expansion initially, and now it looks like it's going to be more of a tight consolidation. But I like the little pattern it's forming here. Right, and like all these stocks, earnings are coming up, so you'd be very careful holding on. But I like that. And I like what it's doing today. It tagged that support line, very clear support line, got right back up near the open, and yeah, this is. I wouldn't give this a 10 out of 10, but like a 7 out of 10 for buying today and an 8 out of 10 for holding if you're already long. And I know the fundamentals are good because it's off and on the IBD top 50 list. Spotify, I haven't looked at Spotify for a while. Okay, so here's a fairly fresh breakout. I know Spotify, I used to not like the business model at all. Just never thought it, I didn't think it would take off, and it did. I didn't think it would find new ways of making money, and it did. And now they're adding new content, and looks to be in a pretty good place, right? So they're generating lots of ad revenue, and that's how they make their money. Plus, they have probably the best set of consumer data on the planet, right? If you like a certain band and you highlight everything that they made, then you fall into a certain personality category, and this is what you like to wear, and this is what you like to eat, and this is where you like to travel, and so you start getting all that data getting sold. It is what it is. I don't like that business model myself. I think it's unethical, but it is what it is. It's the way the modern world works today. And I use Spotify myself, so I'm sure they have all that stuff on me too. It's a fairly fresh breakout. Very good volume on breakout day yesterday, follow through day today. It's a buy, or certainly a hold. I just not sure I would be in this one heading into earnings, although I think earnings would probably be pretty good. It's been getting some good analyst support lately. One more DJT. So we rode DJT from 30 down in this little coil right in there, just perfect coil, right? New uptrend. Of course, it has the political tailwinds. It's got the idea that Trump's going to win the election behind it. And it just went from 30 to our second target of 52. It actually opened above 52, so we got out a little bit higher. And then it's been in this downward spiral, pricing in just, way beyond what the fundamentals can bear. So if in a case like this, to know if that pullback is done, I would drill down to the 1 hour chart. You can see that it did tag the pink zone of the 1 hour chart, bounced quite nicely last hour, pulling back a little bit this hour on light volume. Volume today's been pretty light, I have to say, other than that big sell-off in the first couple hours. Actually, that's the first hour right there. And then 2 hours of downward selling, heavy volume, bit of a dead cat bounce right here. It's not a buy. I wouldn't go long at this level because it looks to me like it really could come down hard. This is the 2 hour chart. You're going to have some support, actually really good support, under 34. And I don't know. I mean, I guess as a lotto play, you're playing the end of the pullback, and you're good $6-7 lower than where we got our exit. So if you are playing a piggyback on our big return, you're getting back in at a better price. I like to do that. I like to buy. I like to get in and out of stocks, continually lowering my cost basis as we go. But I just don't think this pullback is done. I just have to say, I don't think it is. And maybe another line here is at 36. And you could argue a little bit for 38, but I think 36 is probably where it's going to go. All right, guys, I'm going to let you go. Have a great rest of the afternoon. I'll be back in the room in just a few minutes, and we'll go from there. God bless. Bye for now.